I'm Howie Lim. This is Money Hacks by the Business Times.
So it does seem that for the quality of life that individuals want, whatever level it may be at, side hustles may be required.
I think the way to see it is to look at how the younger generation are no longer looking at a 9-to-5 job. So if you look at how they go into the job market out there, what they're looking for is some kind of a work-life balance.
It's starting to feel like we're living in a world where relying on just a traditional 9-to-5 job is no longer enough. Or is it just a case of many more wanting to choose their hours and the amount they earn? The gig economy is growing, no doubt about that. It uses digital platforms to connect freelancers with customers to provide short-term services or asset sharing. So maybe fractional jobs and gigs are just the way of the world. Welcome to Money Hacks, a podcast series by the Business Times, where we explore useful financial tips to help you on your money managing and wealth growing journey. I'm Howie Lim. And if you have feedback or an idea for a podcast episode, do get in touch, btpodcasts@sph.com.sg. Singapore recently passed a landmark bill creating a distinct legal category for gig economy workers to offer better protection. So it's really looking like freelancing, having a side hustle, or being a gig worker could really be mainstream. And in fractional jobs, it's almost as if you can have your cake and eat it too. You can choose your hours and the amount of extra income you gain. Here's Daphne Tan, Head of Business Development at CMC Markets Singapore.
I'm in a very fortunate situation where I do have flexibility in my role in business development. However, with that flexibility comes a lot of long hours as well. What people don't see is how much we actually work. So I have a much longer workday than the average person, and we hardly ever switch off. But in terms of like my colleagues and friends, they look at my flexibility and that's what they want. But when they find out what it takes to get there, a lot of people are not willing to put in the same amount of work or hours. But I personally feel that, it's a trade-off, right? It depends. If you like the flexibility, you have to be able to compensate for it in other ways.
Ooh, that sounds like she won't have time to eat that cake, even though she has it. Okay, we might need some definitions though. Fractional working is not quite freelancing or gig work. Here's Jenn Ong, Managing Director, Head of Retail at GXS Bank.
I think the way to see it is to look at how the younger generation are no longer looking at a 9-to-5 job. So if you look at how they go into the job market out there, what they're looking for is some kind of a work-life balance. So when we look at the population today, the trends that we are seeing and how we develop products for them, we kind of term them into the gig category. But the gig category also does have many subsegments. So for example, we call the fractional jobbers. So these are the people who want to work for a fraction of their time. They may not want to do 9-to-5, 5 days a week. Happy to do 3 times a week. Professional, they could be accountants, they could be interior designers who just want to say that, you know what, maybe for 4 days a week, I'm concerned about making an income. I'm going to get a job that fits my schedule. On every Friday is my own time. Portfolio career. But you need to have that skill set first in mind, right? In order to do the job that you want. So really it stems on your expertise, on what you have. So to my mind, mostly the executives or professional services are able to do that. Whether it's a lawyer, whether you're an auditor, whether you're an accountant, yes, you can do that.
So fractional jobs are filled by executives who are independent contractors, who work only when they're needed and don't receive employment benefits from the companies they work for. The main difference is that these executives are engaged to fill VP up to C-level roles. Highly skilled, qualified, and experienced, they're considered experts in their field, and as such can command higher fees. But however you slice it, the disadvantages are the same.
One way to frame it is, we use our job to fund our livelihood, work-life balance and all. But in time, you will need some kind of financial products from the banks, regardless whether you're good at savings, whether you are good at putting money aside. But at some point in time, you may need a little bit of credit. So for example, even a credit card product is transactional. People use it all the time across all segments, across all walks of careers. But if there is a stringent way of underwriting someone who needs credit from a bank, and the biggest challenge is regular income, regular proof of showing a monthly income, proof that you can actually sustain the income in this job for a long time. So in the last 20, 30 years, it's always been this way. But in our latest study in our GXS Progress Quotient, we were looking at people and understanding from the Gen X and the millennials. And they're saying that, hey, I don't have a regular job every month where I have regular CPF contribution or regular payslip. The banks are looking for stuff like this in order to grant me loan, whether is it a credit or even a secured loan, whether it's a housing loan or whatever, right? It's always based on fixed monthly income. So the cons to me is that these youngsters then find it very hard to substantiate that kind of income documents. Therefore, in terms of financial products, they are kind of set aside, not really served. So that is the one part. The pros, I think we all like it. The pros is that you actually control your own time. You control how much you want to balance your life, how much you want to be out there working your career. But, when you think about this way, you may be happy for a while, but once you start thinking of progressing, forming a family, you need a renovation loan, you need to actually buy a housing loan, you need a car loan, then that's where you need to think very carefully.
Still to come, are fractional jobs the perfect fit for modern hustlers? How can gig workers better plan their finances and access financial services? More with Jenn Ong from GXS and Daphne Tan from CMC Markets Singapore in a moment.
BT Correspondence welcomes Transport BT, the newest member in the channel's lineup, providing in-depth commentary and a 360 view on all things transport. Join correspondent Darren Wong as he explores the business of the sector and the policies that govern it. Hear from the industry leaders who will join him to provide context and insight. BT Correspondence, a new episode every Tuesday, wherever you listen to podcasts. Subscribe and listen today to BT Correspondence.
And now, back to Money Hacks from the Business Times.
So the COVID-19 pandemic may have changed the way many of us work, but fractional recruiting already existed before the pandemic, when companies realized that hiring executives and specialists on an as-needed basis gave them more flexibility and was more cost-effective. In fact, the pandemic may have sped up the growth of fractional recruiting.
From what we see from certain reports is that, especially after COVID, when people experience work from home for the very first time, they found it easier to manage family commitments, whether be it like childcare or giving care to the elderly family members. That's why they tend to want to have this flexibility and also be their own boss in that sense.
That's Daphne Tan from CMC Markets Singapore, and Jenn Ong from GXS agrees.
You're right. It's not so much the young, but I think when COVID hit us a few years ago, it was the start of the changing in mindset. So I could sit at home and work. Nobody knew that you can do a 9-to-5 job 5 days a week. Last time we used to be in the office every day. You can actually sit at home and do it. You can actually have closer collaboration with your overseas counterpart. COVID happened and we all have to adjust and adapt. So that got into the lifestyle. And I guess now we are seeing that people who have gone through that lifestyle felt that, I think I need a bit of flexibility.
At the end of the day, fractional hires or freelancers, though there might be differences, they're all not full-time workers is the thing. How then does this change how they manage money?
Well, in terms of money management, I think it depends on the person's perspective and outlook as well. We are seeing a lot of younger generation folks such as the Gen Z. They tend to live day to day, so they don't think too much about the future. That seems to be the trend at the moment, where they place things like mental health or pursuit of what they like in place of other things. In terms of money management, it gets a little bit harder because when you don't have a consistent income, it's hard to say that I'm going to set aside like 20 or 50% every month into my savings account. What tends to happen is you get frustrated with it. Some months you can, some months you can't. So they do have to implement a system on themselves. Like, for example, they could do every quarter, so every 3 months or every 6 months, they have to have that discipline and to, just inculcate that kind of habit.
I find that financial literacy will be important. To be fair, this group of customers have never had the opportunity to take up products with the banks. And we know that there are times in your life you have to apply for some kind of financial product. And one of the underwriting rules that happens across all banks is your credit bureau record. So we felt that this group of customers have not been exposed to that level of information and may not know that being careful with how you manage your finances. If you borrow, you pay back, helps build your credit record. And when you build your credit record, it gets better. It's like a scorecard. It's like all of us having a report book. So you need to build that scorecard so that, 5 years later, when the record is really great, the banks may be able to give you something that you want. So I think there's a lot of financial literacy to bring them up to a level where they understand the basic minimal of what financial hygiene is.
And of course, no matter what sort of job you do and how you work, that remains the same, knowing what to do with your money and actually doing it.
Well, I would say there are 3 pillars to this, or 3 steps. First of all, they have to think about preparing an emergency fund. Now, this emergency fund could be used for a variety of things, but how they could do it is to set a goal. So by the end of, let's say, 1 year or 2 years, how much is it that I want to have? And how do I automate my savings to get there? So divide it by month, and how much do I need to put in by month or by quarter or by every 6 months, and then track that progress and see how you're doing. So that's one. Number 2, compounding is actually very powerful. And I know we all know compounding in a very basic sense, where you put your money in a bank account and then the interest compounds. But that could also apply to, for example, investing. So if you start with $1,000 and you make, let's say, $1,400 by the end of the year, then you reinvest that $1,400 and you get more from that. So compounding is a good thing to think about. And lastly, we have tax considerations as well. Although Singapore is a very low tax environment, there are ways to minimize your tax burden, such as certain investments do minimize your tax burden, like Singapore Savings Bond, for example, or even contributing to the SRS, which is a optional retirement fund in the CPF, because there are no tax on capital gains in Singapore.
Thank you, Daphne Tan, Head of Business Development at CMC Markets Singapore, and Jenn Ong, Managing Director, Head of Retail, GXS Bank. Next time, it's that time of the year. But not what I meant. SRS, the Supplementary Retirement Scheme. For some reason, we always talk about it at the end of the year. Let's find out why. And don't forget to send us an email if you have feedback or an episode idea. btpodcasts@sph.com.sg. I'm Howie Lim, and this has been Money Hacks from the Business Times.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts. Or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.